then to some macro data. Now, India's core sectors expand at the fastest pace in over a year. It's in fact at its highest level in 15 months. For the month of August, core sectors grew at 6.2% annually compared to 3.7% in July. Now, all the 8 sectors comprising steel, coal, cement, fertilizers, natural gas, petroleum, refinery products, crude oil and also electricity, they expanded. Now, the growth was led by steel, cement and coal. The steel sector grew the most at 14.2% year-on-year, while crude oil and natural gas were the only sectors to underperform.
And we also spoke to top market experts at JP Morgan on India's growth outlook going forward. Let's go across and listen in to understand their view on the key headwinds and tailwinds impacting the Indian economy.
Global equities have gone up, our valuations do not look as bad as they did. And more important is if you now split it into sectors, right? Let's take the financials cohort. Our banks, even in a slowing economy, will still deliver a certain degree of earnings growth with a high degree of confidence for the next 3 years. Shorter-term returns are made on earnings surprises, not growth. We've done a lot of quant work on this. And if you're an investor for 12 months or less, you are looking for companies that are going to beat expectations of growth. Right now, that appears difficult as well because, yes, things have gotten right size on the forecast, but do I have enough momentum for a large set of companies to surprise me on earnings? I don't see that yet.
India has been running on essentially 2 engines of growth, which is services exports built up by the global capability centers and infrastructure. Corporate investment as a share of GDP has been flatlining since 2012 at 12%. We need to really actually find alternative engines of growth. And the corporate sector is, flatlining at 12% is because there are no alternative. We haven't identified alternative sources of growth.
All right, then that's